Hi everyone, welcome to January 9th edition with Mish Schneider, Chief Strategist at MarketGauge.com. This is follow up to what we did yesterday, and it is also a quiet, relatively quiet day in the market, mainly because we're looking at some big inflation numbers coming out. So we're going to do a follow through to the gold and the oil and the natural gas, which clearly was the winner in terms of best move of the day. And we're going to begin here, though, with the currency pair of the dollar versus the yen. And this is a very interesting looking chart and gives us a lot of information, which we'll go through in terms of trading it. But also interesting to note that the Nikkei made a new 30-year high earlier today. And that, I think, is fascinating considering that it took 30 years to get to those highs. But nonetheless, here we are looking at the yen. And if we take a look at this chart, there's a couple of interesting things to note. Number one, on the price, we do have kind of that higher low scenario that we've been talking about a lot. So there was a low in January 23, then another one in March of 2023, and then you could say another major peak low here in July of 2023. And now this low that we made was on December 28th, so right before we ended the year. And that gives you a really good point. If we break down underneath this 140.25, let's call it, then that pretty much tells you that the dollar is ready for another leg of weakness, which is important to note because of the fact that that would be very bullish, most likely, for a lot of the commodities. But that's not where we're at right now. I just want you to park that little idea away because it would also break that series of higher lows, which would mean real weakness for the dollar. But for right now, today's low is sitting right on the 200-day moving average, so that's at 143.42. So we're going to call that the ultimate support. Not only is that the low of today, but if you go back just a couple of days ago, it was where it opened pretty much 143, what I called it 143.42. This is 143.28. So let's say 143.28 to 143.44, 42, that's your major support. In addition to that, we've got a nice pivotal area a little bit higher. If we look at the close on this day, it was at 144.09. If we look at the open on this day, it was 144.09. So 144.09 would be your next area. And you can see that would be a more immediate area to look at because we're actually closing above that at 144.17. So 144.09 above, we can maintain somewhat of a bullish bias for the dollar. Below, I think we can look a little bit more negative, and of course then we would be looking to test the lows of today, as I mentioned before, at 143.43. Now, if we can get through these highs and look at, again, we see lots of activity on the wicks and the candle. So here's a body of a candle, body of a candle. Obviously, this was the big day where the dollar fell hard. And then we have a couple of tops here. So that tells me that if we can get through that, if we can hold that 144.09, then we're looking at not only a move higher, but possibly 144.85 as your next big move higher. Now, this is a negative slope in the 50 and this is a positive slope in the 200. So just from the price action alone, if we step back a little bit, it could be that if we can't get through those levels, look at this high right here. This high right here is 145.07. So what did I just say? 144.89, 144.90 would be an area to look all the way on up to 144.07. If we can't clear that, it is possible that what we're seeing is a giant head and shoulder top. Possible. So just keep that in mind too, especially if A, we can't get up there, B, if we break down into this 200, and definitely I would start to get very negative the dollar and positive the yen, again, if we break down under that low of 140.25. But I want to bring your attention for more evidence down here to the momentum indicator. This is our real momentum indicator, and what makes this so fascinating is, number one, we are getting a negative death cross where the 50 crosses below the 200. That puts momentum in a bearish phase. This phase here is actually still somewhat in a caution phase when it's under the 50 but holding the 200. So we have caution in price and then bearish in momentum. And we also, though, not only cleared back over the zero line, But we also had a mean reversion. So what does a mean reversion mean? It means that you get oversold conditions and then the momentum flips, clearing this Bollinger Band to the upside. And of course we can have a mean reversion to the downside too, and they're often so reliable. Like if you look at this point here, not only momentum was above the Bollinger Band, but it never got quite as high as it had here where the price was lower. So when you see that kind of thing where momentum breaks out but not nearly as strong as it was at lower levels, and then the next day followed by a mean reversion where it breaks down under the Bollinger Band, that's often a good sell signal, just like this was a good buy signal a couple of days ago. However, is that it? On top of what I'm telling you about this negative slope and the fact that we're getting the bounce off of the 200, but if we see that reverse and we can't get through, let's say, remember, hold that 144.09 is the first point, this momentum actually came off a little bit. If it breaks back down under the Bollinger Band, then it'll be sort of a weak mean reversion, and that should continue the move to the downside. So moving on to gold, if you recall yesterday we talked a lot about that 2029, 2030 as being the bias above is bullish, below more negative. And what's so interesting is, first of all, we had an inside day today, which means that the trading range today was inside the trading range of yesterday, not just in terms of the entire high-low, but also even the body of the candle. And this is what we call a doji day. I mentioned it to you because we had a couple of these yesterday. And of course, this is looking at the February contract of gold. But we're still under the 50-day moving average, so there's that caution or warning phase again. So I don't think we can say very much differently than what we said yesterday, which is, again, keep your eye on that 2029. We break down under that. We'll look down under this low from the other day, which you can see right here. Sorry, let me just get that cursor on there. Was at 2022, so under 2029, 2030, 2022, then we go back down to around 2010, and then you can see here where that you had a lot of support up around that 1995, which corresponds with the 200. And above that 2029, we really want to see this get back exactly what we talked about yesterday, and that is 2045 is the pivotal area, 2050 even better. Here you can see the open and the close on this level right here was at around 2051, so let's call it 2050 to 2052. And again, waiting for these inflation numbers. So moving on to crude oil, yeah, it's starting to look a little bit friendlier to me. I'm kind of seeing this now more. We talked about, is this a double bottom? It kind of feels that way. I would feel better if we really got through this level here, which would be anywhere between 73 and 74. Not only would it be kind of more of a confirmation of the double bottom, but it would also mean that we would be taking out all this work that we've done since the end of December. So right now, what is interesting though, is that in the February futures of WTI crude, we actually got back over that 50-day moving average. So that is going from a bearish phase, where it closed at yesterday, back to a recuperation, or what we call a recovery phase, which actually is kind of like my favorite phase, because I like when things have been beat up, there's a huge short float, and then they turn around. So in terms of putting some numbers on that, if I spread this out a little bit here, we can say that 72.09, that's your 50. If we stay above it, that's positive. If we stay below it, then maybe this was just another weird day. And again, we talked about the inside day in gold. Here's a big bar this day, and a smaller bar inside the bigger bar from the day before. And again, the candle is even an inside candle. So it definitely tells me that we have a bit of a indecision here by traders. And so what would really resolve this, I think, would be that move over 73. So remember that 72.09 is your pivotal level. Above, we really have to watch that 73. We get above that, I'm going to start to get pretty bullish. If we can hold that 72.09 level, then we're back to looking at really, guess, somewhere around 71.60. That would be our next level of support to look at. And of course, then from there, we'd be looking even lower probably more like around 71, 71.02. And finally, the last instrument here would be natural gas. So what did we say yesterday? How to get through 3. It got through 3, tested that 290 for a minute. That was what we said had a hold, right? Remember, it was like 285 to 290. Came in right there, was a buy right on the open. And so here you go. We had a nice close here up at around 320 after hitting 340. And look at that 340 level, by the way. Here is good resistance. If we go back to the last time that we actually had a high here, which was back in November 14th. So what we can say about tomorrow is now that we're back above the 200, we have a different phase. This went from a recuperation phase. You can see why I like that phase. It gives you explosive moves when things are very overly sold. And now we're in an unconfirmed accumulation phase, which means 315 is going to be your pivotal number that has to hold. We get through 315. You can see there's a little bit of resistance here up around that 319 level. And then it's going to be interesting since this wick doesn't show a lot of price action in here on this particular chart on a daily. You can see that we have a lot of work to do between that 320 and that 340. So it might be that we just get a little bit of a chopping action. It also might be that after we've had 1, 2, 3, 4, 5 days up in a row, that we get an inside day somewhere between 340 and 320. If that happens, I would take that as a good sign, particularly if we close over that 315, 320, and then we'll be looking to be a buyer the next day. Okay, that's it for now. Hope you have a great afternoon. Happy trading, and bye for now.